Grant, Bob, aka Uncle Bob. Thank you for coming over here at Coffee with Pros.
Absolutely.
Happy to have you guys here. Uncle Bob, tell us a little bit more about Atlas Title and yourself.
Well, I got into the escrow business in the early 1990s. Got out of that in 2005. Got into the title side strictly from there. So all in all, it's 25 plus years. I'm not good at math, but it's 25 plus years like that. Atlas Title opened the doors 2 years ago this month. Started out in California only. Now we're in 35 states now.
Congrats.
So we've grown a lot. We started out for the lender world, but the way the market's changed, everyone adapts. So
Right.
we've increased our product line. So we're doing well. We're doing very well.
I'm happy to hear it. And I've been with you guys. I'm a customer as well
Yeah.
for 2
We
years.
appreciate
Couple
that.
years.
My
absolutely.
pleasure. I've been happy with you guys. My team has been happy, and we're going to survive this.
Yeah.
We will. We've been through a
Definitely.
couple.
Yes, we have. Grant, what about you?
Yeah, so been with Atlas since kind of the start with Bob, about 2 years now. The title industry as a whole, just over a decade, and it's been a fun ride the last 2 years. It feels like it's been a lot longer, but I was joking. We were doing some comparisons the other day, and just how much we've grown, just in California. Bob mentioned we're in 30 plus states now. And, when we initially kind of launched the group, it was towards lenders, brokers, credit unions doing refinances. Obviously, that volume has shifted in today's market.
Yes.
And so about 8 months ago, we were anticipating some shift eventually, right, in the market. So we launched a reverse division. So there's some nuances to Title and Escrow on the reverse side. We obviously have our home equity division that we've launched to help eliminate kind of unnecessary cost for those HELOCs. A lot of times title companies are still pushing the traditional fees on a HELOC, where we're saving people on average about $500 to $1,200 on a HELOC compared to the industry standard. And then we launched our commercial division this week. We went live in November. And really the need, as you can imagine, being a loan officer broker, folks are looking to diversify, whether it's doing a reverse loan for folks or a commercial loan. Really to kind of see what the next 12 to 15 months look like. So it's been an exciting ride. Grateful to be a part of this team. We continue to add new partners each month, which I think in this environment everyone's looking for a way to win in some cases. And you've talked about your value for your clients, right? Of being able to talk to them and say, hey, we've partnered with Atlas, and you get to choose a title and escrow company. Historically, these companies are about 30% higher than Atlas, and so getting a referral out of that saying, hey, not too many loan officers are talking to me about title and escrow related to fees and what I'm saving. It's funny, you ask people, I even talk to family members, right? And they're like, hey, what do you do again? And I'm like, at the end of a transaction, when you sign all those docs and you write a check to us, that's kind of us. I'm like, oh, okay, I get it. And most people don't know they have a choice. The consumer actually gets to choose. In most cases, rely on you guys as the experts in your fields to partner with the right folks. But yeah, we actually, we were talking about this earlier. We launched something on our website talking about how much money Atlas has saved California consumers over the last 2 years. It's nearly over $4 million.
That's amazing.
In closing costs. So it does add up and it is meaningful, especially in today's environment. Things have gotten a lot tighter.
Yeah.
Right? People are able to qualify. Rates are a little bit higher. And we've seen a huge ability to negotiate fees and purchase contracts. Where last year you were getting 8 to 10 offers on every home, and people really didn't care as much, right? We were joking like you'd list your house, it'd sell in 2 days, right?
Yeah.
Now we're seeing things on the market a little bit longer, depending on where it's priced, and we're actually seeing some of our agents be able to negotiate whether they're paying for all the cost on the selling side or the buyer's taking on more credit. And with our fee structure, I think we did a deal the other day in Orange County. It was $1.2 million. Title and escrow, we saved them about $5,700.
Wow.
So, that's a lot of money when you're talking
Big
about
number.
Yeah, it is.
where things are at in today's market. And, it's funny, people ask us like, hey, how are you guys different? Or like, what are you doing to change? I mean, I think the biggest thing is we're just transparent in what we're actually charging you. We kind of pride ourselves on we don't have junk fees. We've kind of keep
I love that.
No junk fees, because there's different things out there in the marketplace that in certain areas, especially in different parts of the country, where it's like, wow, I can't believe how expensive the title and escrow fees are. And there's a list of like 12 different fees. You're like, what's this? What's that? I'm like, nope, we don't have any of that. And they're like, how or why?
Right.
And then we kind of explained to them how we kind of own the underwriter, how we're unique in that fact, and that really hasn't been done in quite some time. And then, I think people understand that and kind of appreciate the transparency because it's been so confusing for so many years.
Which I was going to ask, in a nutshell,
Yeah.
how would you explain to a consumer what a settlement provider is, what Atlas does as a title and escrow company, in layman's terms?
Well, the title company insures the property, make sure there's no unforeseen liens or encumbrances on the lien. So when the new buyer comes in, it's a clear title. So there's no unsuspecting claims going to come down the road. And if there is, the title company takes care of that. That's what the title insurance covers.
Okay.
Like that.
And then for escrow?
Yeah, essentially, like we're the third party that holds the funds. It's a secure way to transfer funds. There's more that goes into it than that, with related to settlement statement, maybe tracking down a payoff. For a consumer, they might not see that as much, but it's interesting when you talk to people about escrow. There's actually a service involved with that. There's a lot of detail that goes into it.
Right.
The consumer doesn't see that as much
No, they don't.
as you guys or
Yeah.
your team. Especially on some of these deals that have maybe 8 different things that we need to track down, right? And it's interesting on the title insurance side too, like talking about like layman's terms, straightforward. The most popular thing that pops up is like a mechanic's lien. So,
Yeah.
for example, someone was doing construction on their house and they decide not to pay their mechanic and they're trying to sell that house. Well, if that mechanic doesn't get what he's paid, he's going to file with the county some type of document that's going to show that, hey, I need to get paid. And so that's where we come into play and say, hey, wait a second, we need to get this taken care of in order to proceed. Otherwise, that next homeowner would be taking on that lien. So it's funny, one of those things that you don't need until you need it.
Yeah.
I think that's insurance in a nutshell.
Yeah.
I joke all the time, certain things. I'm like, why are we paying for this? And then you actually need it, right? Homeowners insurance, whatever it might be.
Yeah.
And then it pays off once the bill hits or something comes up. So,
Fire protection, of course.
correct. Yeah.
Circling back to, how the market has shifted, and the narrative has actually shifted. It's now a buyer's market, and they're starting to see a lot more control. Yet they don't know it, or some of them don't realize it. And properties are in certain areas are sitting longer than 60 days,
Yeah.
and for even during the pandemic, prior to that, I've always been negotiating settlement provider. Hey, buyer, you have an option. You have a choice. Yeah. If you want your offer accepted, I know you and I, Uncle Bob, discussed this during the pandemic, offer to pay the seller's closing costs, and then we can go with Atlas.
Yeah.
Most of the times, those offers
don't
weren't
realize
accepted.
it.
Yeah,
Yeah.
but the seller was controlling that narrative at that time. So the buyer wanted the home, so the buyer would say, okay, I'll go with your company instead of using, the one that my loan officer or broker or lender is suggesting. Well, now we have that leverage, and I still offer it. Yeah. I know last week we managed to get Atlas Title involved.
We did.
And only on the title side, of course, but hey, 50% of something is better than 100% of nothing.
Absolutely.
But I continue educating my customers. Hey, you have an option. You have a choice. Let's go with our settlement provider. And you provided me with that fee sheet within minutes. You asked me for a property address. I shared it with you, your team, and you got that quick. And I sent it over to the listing agent, and she couldn't believe it. Yet she still went with her escrow company for whatever reasons they had, of course. But it's a great shift. I like it. And again, these tough times create tough individuals, and we have to get very creative with the way we structure these purchase contracts in a legal way, of course.
Of course.
Definitely. Yeah. Yeah, it is interesting. At the time when we kind of rolled this out back in March, we called it Atlas Title Buyer's Advantage, and we were just having every agent or lender involved on the buying side, like you said, to write in that they wanted to pay 100% of those title and escrow fees and cover those costs. And we saw a pretty significant adoption in certain markets in California. We have an office in the Roseville area, and we saw some significant adoption there. The lower price points, right? It's more meaningful or impactful maybe to those folks. But there's always going to be that pushback of old school. Hey, this is my guy, this is my escrow, or whoever it might be. But at the end of the day, I think bringing light to the consumer of realizing, hey, this is an option that you have, is creating value. And it's funny, we were on a Zoom presentation a couple weeks ago with about 100 realtors, and one of the comments that was made was, hey, you know, consumers don't care about title and escrow. And so I returned the question with, why do they not care? That's typically because the agent doesn't care, the lender doesn't care. So until you start to care, they won't care. And I go, the next generation of home buyers are now Googling everything.
Yeah.
Why? Why am I paying a loan officer? Why am I paying a real estate agent? What does title and escrow cost and why? So you have the duty and opportunity to educate your clients on a step that 95% of the industry does not do today.
Yeah.
Or have neglected, because they've said, oh, consumer pays, what does it care? It doesn't affect me. But it can, because that value is there, where we're seeing agents go to listing presentations. At the end of the presentation, they're asking them, hey, we've partnered with Atlas for title and escrow. We're going to save you on average, 30% on your net sheet. And like, what does that even mean? Like, call us back after you talk to 2 other agents or 2 other loan officers that you're shopping, and let us know which one to talk about title and escrow. 9 out of 10 don't ever talk about it. So they're calling you back saying, hey, I trust this guy because he actually went one step above that the other ones that I was shopping didn't even talk about. They might talk about closing costs, but they're not actually explaining to him why and what and how. And I think folks now want to actually understand why, what, and how, and not have to go on the computer and have to, like, oh, why don't I just go with the online company, right, that's going to do 1% listing or whatever it is.
Yeah.
They want education. They'll pay for value. So that's what we're seeing. We're just trying to educate people and just take the step. And you guys are doing a great job at it. You included on almost every, Bob said almost every
Thank you.
presentation where you guys are going to stand out, right? And you're going to get referrals saying, hey, like, if you think about when you're first buying a house, how many new people don't get taught this in school, right? They don't get taught financial literacy. They don't get taught certain dynamics that, for me, I think is a huge part of dealing with a great loan officer, is saying, hey, I have a lot of questions. Do you have time to explain it to me? Because most guys are, hey, get them off the phone. They're not looking to buy today.
Yeah. It doesn't work that way.
It doesn't. And so I think we're going to see that over the next 6 to 8 months of the folks that are putting in the value, right? Getting creative with new ideas, different marketing ideas, this podcast that you guys are doing. I mean, it's time, rather than we got a lot of people like, hey, it's tough right now. Let's just turn the other way and let's come back when it's easy. And those people probably won't be around.
Right.
Frankly, I saw an article today saying something about loan officers driving an
Uber. Yeah, I read it too. Yeah, Housing Wire.
I was like, yeah. I thought it was a unique headline because we joke about it, but that's the reality of kind of where we're going, I think.
Yeah, no, it truly is. And I think a couple of weeks ago or months ago, Uber also had some sort of layoff, or they were limiting on the drivers that they were signing up. So I don't know how this loan officer got that job there.
Nothing's untouched.
Yeah, nothing is. So, yeah, definitely saving money. That's the key. Education. That's the key. And this is the purpose of this podcast, and especially this episode. I've always been a strong believer that the consumer should be educated on title and escrow. Just because you have no control over it, allegedly, doesn't mean that you shouldn't know what options you have. So you brought up very, very interesting points.
Yeah.
And again, I'm a huge advocate for Atlas Title. Let's get Atlas Title on this purchase contract.
Thank you.
Absolutely.
No, it's my pleasure.
Yeah.
So a little bit more about you, Grant, as far as what were you doing prior to Atlas Title?
Yeah, so I was with one of the larger title companies for almost a decade. Bob and I had worked together for many years, and then before I even got into title insurance about 10 years ago, I worked for the Los Angeles Dodgers. So out of school, I was working there in the front office. And
were you a fan?
I actually grew up in Sacramento, so you can guess the team that was my hometown team, and they won 3 World Series while I was at the Dodgers. The Giants did, and at the time when I left, I think the Dodgers have won the division every year since the last 10 or 12 years. So it's an interesting industry as a whole, and I think the unique thing about Atlas, I think we have 64 employees right now. Our team is really truly like a team. We're on weekly calls talking about strategies, trying to get clever with marketing, trying to present value to you guys and what actually stands out in today's market. One of the things that we launched early on, and this was in the peak of the refi boom, was solar came up a lot on these reports, right? And so more folks have adapted this now. So I'm not saying it's just something we're doing, but at the time we were like one of the first ones actually talking about it. And the idea is there's a solar lien that would pop up on a title commitment. Gets a little bit more in the weeds when we're talking about this, but usually it's a 10 to 14 day subordination process, a couple $100 to the solar city. And that was a drag, whether it's your processors trying to get it or your borrower irritated they have to write a check to Solar City or whoever, and they don't know why. They're like,
100%.
I just want my money. Time. I want the cash out. Give me the. What is this about?
I don't want to deal with the solar company.
Yeah. So we issued this endorsement, gave you clear to close, no subordination needed, and it was a huge lift for our clients just based on feedback from you guys saying, hey, is there something that you could do to help eliminate this? So something like stuff like that, we see it and then we double down on it, and we want to share that news, right? I mean, for us, I think, I don't know, depending on how you look at it, last year we had tremendous growth with everything going on. At the same time, there was folks that were so busy that didn't have the time to even take a look at Atlas, right? We're a brand new name. We have a rich history of, I think, our executive team's got 180 years experience combined.
That's amazing.
In the industry. And so I say that because they've done it before. They know what they're doing. Just the name is new to people.
Yeah.
So that's been our biggest
hurdle
is like, who are these guys? It's 5 questions of getting to know who we are and then getting us that opportunity to earn their trust in business. Because it's funny, historically, people would sell that, hey, your rates are low because the service is slow. That was kind of the tagline, right? And I get it. Like, if I was at one of these companies where I was an employee, that rates just keep going up everywhere, like, they're going to assume that the service is worse. But the nice thing is we have a unique opportunity where we have an escrow team here in Irvine that can close purchase transactions in the event that that's an option. And historically, I would say here in Southern California, it's kind of split out. And so we have a great partnership with a lot of our independent escrows that we can do title only. And then in the event that some folks require title and escrow together, we have a great service-oriented team as well on that front. So gives folks a lot of options, and that's what we're about, is being flexible. I mean, all the time we talk about it. We'll get a deal. Oh, can you do a hard money deal?
Yep.
Can you do this commercial deal over here? And we always say, hey, send it to us. Let us take a look at it. We had one just a couple Fridays ago, like 3 o'clock, called rate locks expiring. Hey, our underwriters, denying it. Can you guys look at it? Well, we're like a broker in the fact that we have multiple underwriters. So we went to a couple. We were able to get a prelim out in 2 hours. Saved the rate lock. The loan was done because at the time they locked it at a ridiculous rate. And he called and he's like, you guys getting all my business now. The fact that you saved that loan in this environment means more to me than anything that happened the last 12 months.
That's amazing.
And so that's where I think, we have a edge per se, and kind of being a little more nimble and smaller. We talk all the time, our office in Irvine, we have our chief underwriter there. All of the people that need to make a decision on a file, we can just walk to, especially in today's environment with folks working remote, out of sight, out of mind. Most of our staff is in office and can communicate, just turn and talk. Hey, what's going on with this file?
Makes it easy.
What's going on with this signing? So it sounds simple, but in today's world of IM and so-and-so is at a lunch break or something, it's always a legitimate excuse, but you can understand time is of the essence and service is a big deal in our space.
Communication is key. You know that, Uncle Bob.
Absolutely. Don't go dark.
Can't go dark.
Front lines, always. Good or bad.
Definitely.
I know you guys also do have a Flex Close program, and that has been a huge help when dealing with a purchase buyer and, the times that, we can use Atlas Title for both title and escrow. We can fund after the Fed cutoff time, correct?
Big time, yes.
Fund after hours, and that's huge.
It is. Not everyone has that luxury.
No. So 2 p.m., that's the Pacific Standard Time?
Typically, that's the Fed cutoff, and, we have a unique partnership, our affiliation with First Funding on the warehouse side, which offers that Flex Close.
Shout out to Trenton Fudge.
Yeah, it's Trenton listening out there.
Yeah.
I was actually just talking to those guys a little bit earlier today. But yeah, I mean, it's very unique, and it can be utilized on the purchase side too, that people don't realize. And the concept is for people to kind of visualize it is you're in an app on your phone and you can move money from the checking to the savings like that, instantaneous funds. It's the same idea.
Exactly.
And so Yeah, it's a great thing to take advantage of, and I'm glad you guys are Flex Close certified, because we talk about it a lot, and some people it doesn't conceptually realize the value, but there's definitely some synergies there.
Totally. We actually did a flex closing,
Awesome.
and special recording. I believe in Orange County is 5 p.m. That's a cutoff.
I believe so.
So yeah, we funded at 4, and we got it special recorded on Friday at around 4:45.
That's great.
So again, because we didn't have to wait until Monday.
Yeah.
The buyer was happy.
Yep.
Buyer got his keys. Seller didn't get his funds until Monday, but
Yeah.
that's another story. They're okay with that.
Yeah.
Our priority is always the buyer.
Yeah, makes sense.
Yeah.
That's great. Yeah, it's a good thing to bring up. It's funny too. We go to all these different conferences, right? Depending on what we have going on, and hearing what's valuable to people in today's market. Something like that stands out, right? Just because you're going above and beyond for your client on the buying side, right? And some people overlook that or overshadow that, but in today's market of social media and reviews, right? Like, you have one happy customer, they're going to go tell 5 people.
Yeah.
You have an unhappy customer, he's going to tell 20. Mm-hmm. So understanding that, like, we take that to heart as well. Like, a lot of our business is thanks to folks like you that refer us to other partners, other brokers, people in the community. We'll get a call, once a month, or sometimes more, depending on what's going on, saying, "Hey, got your contact information from so-and-so. I heard you guys can save some money here or there." And we're realizing now, going in today's market, just being there, I mean, we've been consistently in front of certain clients and individuals at conferences, just providing value, right? Hey, I understand you're busy. We'll be here when you need us. Now we're starting to get those phone calls because we're seeing a bunch of disruption in the industry.
Yeah.
Whether it's people unfortunately losing jobs, changing jobs, getting out of the industry, where, we kind of see it. I saw a quote the other day. They were saying, where there's chaos, there's opportunity. And, we're going into that realm right now. So I think we see Atlas as, this is an opportunity for us over the next however many months we're in this new environment, to grow and expand and provide more value for you guys. One of the things we've been doing the last couple weeks is we have a farming tool that's nationwide, that helps you identify certain properties that are high equity, shows certain data points. But one of the popular subjects that have been come up is an assumption loan, which has not been around for probably a decade. It's far and few that actually are eligible. But in certain markets, in certain areas where there's more VA loans, and folks leave for certain reasons, right? They got to move, military's calling them to go here or there. You can bring a buyer in that qualifies to assume that interest rate, which is a big deal. So it's more tailored for real estate agents that are folks that are trying to get these folks to list their house.
Sure.
And they could advertise, hey, we have an assumable loan at 3%, which could probably save your buyer $200,000 to $300,000 in interest over 30 years by acquiring that loan. And so this tool is helping agents identify those type of loans, and then on the return, you as a lender get to help them with buying. Right?
So the new buyer would need a piggyback loan, correct?
So,
or a bridge.
So, and I don't know the qualifications if it allows a second loan involved.
Yeah.
Because the equity could be high, and it could be hard for them to come up with the down payment.
Yeah,
right?
exactly.
So what we've focused on, really, the conversation of the last 2 weeks, are folks that bought in the last year or two.
Okay.
Equity's not as high. The equity's actually slowing down, right? Maybe they put 10% down, whatever the number might have been. So the likelihood that they could come up with that difference is a lot higher than they bought 5 years ago and they got $500,000. And how do you come up with that?
Yeah.
Because I think there are some nuances based on the lender, on if they will allow a bridge loan or
So it has to be government financing.
Correct.
Exactly.
Yeah.
So, yeah.
So it'll be interesting to kind of see, but like that's been a huge value add to a lot of folks. Like, hey, if you got your license as a realtor in the last 7 years, you don't even know what this is.
Yeah.
So it's a great opportunity for you guys to, bring the tool, and that's something that we've helped leverage our clients with, this farming tool. Bring us in, set up, if you guys are doing a lunch and learn for a bunch of agents, we'll come in, do a 10-minute presentation on the tool. We'll get everyone set up. It's, people are familiar with the property profile as the old school term. That's essentially what it is, with some more farming capabilities. But it's been a huge lift. I mean, we talk to people like, hey, I've been on this system for years, and they're all just outdated. Our UI is very clean, very easy to use. So encourage folks out there that are listening, if there's an agent out there that's, connected to you guys, or you want us to do a presentation, we're happy to do that on the behalf. of you guys, because it's funny. Everyone today, it's funny. We get on calls and they're like, "Oh, why didn't you tell me about this 6 months ago?" I'm like, "You were too busy."
Yeah, everyone was too busy.
You know, like your
Yeah.
phone was ringing off the hook. You know,
Yeah.
like now this is like old school. You know, you go after like non-owner occupieds of investors that live out of state, that got multiple properties that might look to diversify. You know, you go after adjustable. You could do it. I mean, you go after certain lenders. Like anyone that has an adjustable rate, if that thing's moving anytime soon, might be looking at potentially refining. You know, depending on their situation. So definitely a tool that, you know, additional value add when we started Atlas. People are asking like, hey, what other tools besides, great pricing, great service, is there anything you can help with my business? So it's a great tool that you can help leverage agents and just a good value add.
No, that's amazing. Yeah, and that's part of your title profile as well, right? That search feature.
Yes, yes.
Correct.
Is it Flu ID or what's the name of it?
Fluid ID.
Fluid ID. Okay.
Yeah,
No.
I think
Everyone has time to talk now. I just came from 3 offices. I didn't expect much. I had 3 conversations with folks before I got here, and everyone has time to talk now.
That's very advanced. That Fluid ID.
Yes.
Yeah.
It's super advanced technology right there compared to previous title search, title profile providers that I've used in the past.
And it's funny, I was on a demo with a gal back east, an agent, and it's available in the App Store, and she does like door knocking. And so there's an option to have a door knocking option on there
There you go.
and kind of see what's going on with their financial situation or whatever it might be, what loans they have on it. It also has some comps and stuff on there that gives you some.
They're pretty accurate.
Yeah,
I've compared it to some other
Yeah.
technology that I use, and it's pretty accurate.
That's great. Yeah, and it's interesting too because we're seeing so many different values change by the month with things sitting on the market a little bit. I think it all depends on how people price their home. I mean, I'm in Costa Mesa, that's where I live, and you know there's some homes on the market over 100 days right now, with maybe a price reduction or two, and sellers just sitting. And then I saw one the other day that was priced appropriately. 3 offers over ask, talked to the agent, and escrow the first weekend.
Might be some seller denial right now going on.
Big time. They're looking at last 2 years, you know, and
Well, I always tell people, hey, comps from 3 months ago, those are old now.
yeah, that's fair. Yeah, yeah.
It used to be 6 months.
They don't like to hear that, but you got to
no.
give them the truth.
Right, and it hurts.
Yeah,
I've seen a couple homes go through maybe 3 or 4 different real estate agents.
Yeah.
And the property's still sitting.
yeah. You're like, it's not the agent.
It's not the agent's
Just
fault.
lower the price. You'll
Yeah.
sell it.
And most of the sellers don't want to.
Yeah,
So offer some seller credits.
yeah, definitely. We've seen that too. Agents, sellers taking on the full boat for title and escrow now, advertising that. Hey, well, we're going to pay for 100% of the title and escrow fees. A similar dynamic how we're doing on the buying side. The seller's now offering to the buyer, let us pay 100% of the fees.
Yeah.
One of the other things that is, as I'm thinking about it, for different agents out there that are listening, with the tool, we had an agent call us, I don't know, a couple weeks ago, and there was a listing that was for sale. I think it was $2.1 million, and she thought it was overpriced. And she goes, I just want to look at how many 5-bedroom single story with a pool are in this little zip code. So we were able to pull that up, and there was like 9. And the last one to sell was like 8.5 years ago. And her buyer had been looking for about 8 months and knew what type of financial situation she was in. So at the time, without the data, she thought it was overpriced. They ended up paying $2.4 all cash and beat out 7 offers.
Wow.
And she called me and she goes, without the data, I'm just another person with an opinion.
Yeah.
With the data, actually shows facts. And I think a lot of times, right, as title professional, real estate, financial advisor, loan officer, we have our opinions on the market. A lot of people have been wrong. Look at interest rates. No one predicted that, right? So like all the experts, like, you're all wrong.
I'm wrong all the time.
Right?
With the rates.
All the time, right? And so like it was interesting, and I've used that story several times now because at the time, you know, she was like not sure about our profile. She's like, what does this do? And I'm like, you got buyers looking? She goes, yeah. I go, let's qualify. What are they looking for? So you could sort by, single family home, off market, 4-bedroom, 3-bath, single story with a pool. And you can identify the 7 in that neighborhood. And if we're looking to buy, we can narrow it down to which ones have high equity, which ones have been there that long. Let's target them. Let's write them a letter. Let's get creative. And now, it's interesting. Value and money is all perceived by what's there and how long it's going to take. So she knew basically like, hey, this market, this house, 5-bedroom, not coming on for 9 years. And we were able to show her that because the last 12 homes in that market have been every 10 years they sell. So another way to leverage the tool with data, for your homeowners that are looking out there today that might be discouraged or, hey, the market's too hot, just look at a certain neighborhood. Focus on, hey, I like this area of Lake Forest. I want a condo. I want a duplex. I want a single family, whatever it might be. I want a 3-bedroom. And these are the qualifications. And you can literally just work those for 6 to 8 months. To your point, it doesn't happen overnight. It might be not looking today. It might be 8 months from now. And I think, too, consumers get caught up in the interest rates, right? They read the headlines. They're all crazy. It's all extreme, sky's falling. The market's still actually pretty good.
That's what the news outlets like to do.
Yeah. So it's the right perspective, and talking to someone like yourself that has the knowledge and the ability to like, hey, here's the real data on what's going on. This is what I would recommend. I remember someone asked me a long time ago, when's the best time to buy a house? And the answer was when you can afford it. And it sounds very simple, but if you can afford the payment, better than renting. You're paying 100% of someone else's mortgage.
I always tell people there's no perfect moment. You make the perfect moment.
It's true. I mean, it's all perspective, right?
It is. And we've been here before with these interest rates are not that high.
Yeah.
I mean, you've seen
Now
interest
when you
rates.
see into the teens,
What was
70s.
your first rate, Bob?
13%, I believe.
That's
13%.
And they've been
Yeah.
in the 19s, 20s, I believe.
Crazy.
Yeah. The only difference was that the home values were also,
Yeah,
Very
200
low.
grand.
yeah,
I think I paid $33,000 for my first home.
It's incredible.
it is. We just need to see some sort of correction with these values, and they'll be healthy. It just means, more business for everyone as well, and great deals for buyers.
Yep.
You want to touch a little bit more on the commercial division that you guys just
Well, it's
opened up?
pretty new. I mean, we're
Yeah.
just been in for not even 2 weeks. We're learning as we go. We've got a qualified escrow officer, title officer, commercial experienced. But like Grant said earlier, if there's a transaction out there to be had, just bring it to us and let us evaluate it to see what we can do. I know we're going to be the service level, the pricing is going to be comparable to what else is on the market, but our service is what's going to allow us to shine.
And
So
to add to that too, we are just launching in California to start. So anything in California, the thing that we've realized is, for what it's worth on the commercial space, a lot of folks, when they say commercial, it can be very generic in terms of what that means. So we've had a lot of different scenarios come in the last 2 weeks, and we can either help or we can't help. But the consensus has been that there's a need in the marketplace for a solid, reliable title and escrow company that can handle commercial. And what I mean by that is most companies in general only want certain dollar amount deals because it's not worth their time if it's, a $5-8 million deal or a $3 million deal. They want the 20, 30, 40, 50, in the commercial world, they can get pretty big. So for us, that's where our niche is. We pride ourselves on transparency like we talked about. And you could send us 5 loans a month or 500, you're going to get the same pricing. And some people appreciate that, some people don't. But for us, it's about the consumer winning and you winning with the consumer. And if that allows you to do more business, great. But, it's how we kind of set things from the beginning was here's our tranches, like specifically for the first mortgage stuff on the refinances. We talk about it all the time. When we first looked at things, the average loan amount in California was around $550,000. Our buckets are in tiers of $300,000. The only title company in the country in the state of California that has buckets like that. So it goes 0 to 300, 300 to 600. Most people go 500 to 750, and the pricing goes up $200 to $300. So it definitely is a lot more competitive on that side. I think on the commercial side, we're definitely going to be competitive from a fee standpoint, but it's more about the service and having the expertise. Bob mentioned we have a dedicated escrow officer and team that kind of specializes in that, which is very helpful and unique in the fact that, in some cases, commercial can be spread throughout offices, right? Our office in Irvine handles everything from start to finish. So you have peace of mind knowing, hey, if you need something, if you're local, drive on over. I mean, we have clients come sign in our office all the time. That's the beauty of having an office locally. So we're looking forward to growing the commercial group and getting feedback. If anyone's in the commercial space or has any questions, the tool that we mentioned earlier, the Fluid tool, also has property type for commercial properties as well to identify. And we're looking forward to kind of expanding into that.
Oh, great to hear it.
Yeah.
And you have to adapt and evolve.
Yeah, definitely. I mean, if you read, different reports out there and earnings calls, a lot of people are talking about commercial being the next, 12 to 18 months, a pretty significant push in that realm. So it's gonna be good. We're excited to kind of expand in other states. Our plan is to expand in a handful of other states, like we did slowly on the residential side, and we really do that purposely with our clients' feedback. So if they're saying, hey, we're doing deals in Florida, we're doing deals in Texas, that's where we will initially expand first based on kind of their feedback.
Right. Any final thoughts?
Bob, anything?
No, I just want to say thanks for your service, all the veterans tomorrow. Don't want to forget
Definitely. Yeah.
Absolutely.
And lastly, buyers out there, don't forget, you can shop around for settlement services, Title and Escrow.
Absolutely.
That's on the loan estimate, page 2, section C.
I like it.
that. Who you work with matters, definitely.
Absolutely.
Thank you, guys. It was a pleasure.
Thank you.
Appreciate
the time.
Thank you.